Hello everyone, Jesse Webb, Traders Pro. Market conditions have slipped back into a bearish in a bear market condition, which means traders and investors should consider trading with a bearish bias, shorting stocks, buying inverse ETFs, buying put options. Again, as I've mentioned, that's the more aggressive strategy. The more conservative strategy is to either look for inverse ETFs, cash, and trading very small, having smaller trade sizes, smaller position sizes as you're going into some of these trades. Let's look at some of these internals. We've seen momentum still kind of stuck here in this downward trend, and that we're getting some volatility here just in this last week as we're dealing with banks and the Fed and a lot that's going on there, a lot of fear, a lot of uncertainty that's still happening, and we're approaching. There's some support levels here. We've talked about this overall pattern, this uptrend here now, this trend line. We've just created a lot more overhead resistance with this last little downturn. So we'll see if any pops hold right here, any rallies hold, find resistance, and then ultimately start to work their way back down. That is the path of least resistance. At this point, it's still down now because of this trend that we've got, and but it is kind of stuck in the middle of this wedge. Is it going to go this way? Is it going to go this way? Even if I were to draw a support line here, do we move this way and overtake some of these overhead resistance levels, or do we start to move back down again? On the extreme levels, breadth is down. Well, this is momentum still, but in terms of the ranges that you typically can get a bounce, this is one of them right here, or very close to it. We could certainly go back down again. We've rallied back up to this level, and so these are areas of extreme where the trend typically does not sustain itself at extremes. It's going to work its way either back the other direction or back towards the middle, and then overall work its way back down again. If it's in a downtrend, come back up and then work its way back down. So we've bounced off of those lows, and whether we continue this direction, that's kind of what we're going to see here in the next, probably starting today. Get a good idea of how the overall week's going to look. Breadth is oversold. When you get that green arrow and it's oversold on this direction, that means that it is towards the extreme range of that, and that it could get a reversal bounce. Doesn't necessarily mean it's going to reverse the entire trend, but what it means is that it's at an unsustainable low. When you get down to these levels, you're going to see this extreme, but you're going to see this green, because that's an area where it could bounce and go this direction. So when you get to that location, typically you don't want to start to continue to go with that overall trend, because it's an opportunity for a contrarian type reversal. The demand is going to start to be created because there's no more supply. There's nobody left selling at these levels. Just like at the top, there's nobody left to buy, and so that creates some additional supply when people start selling. So we're with the breadth indicator, we're sitting at that location, but we're not at the real far extreme on breadth. It could be a lot worse down here. This is at 19. That's still pretty low. That means that 80% of stocks in the S&P 500 are trading below their 50-day moving average. So the vast majority of S&P 500 stocks are trending lower right now, and that is, again, that's the path of least resistance. You don't necessarily want to fight trying to get into that direction. That being said, that's what contrarians do. They look for the exact opposite. When everybody's on one side of a trade, start to look for that other direction. So as you're looking through these indicators, be aware of that contrarian perspective as you get into some of those extreme locations. The buy-sell ratio, we're sitting up here. Again, it's an area where it's there's a good chance, high probability for a bounce. Whether or not it is a bottoming type bounce, that's you never quite know until you have 20/20 hindsight on that. But in this case, this is a location historically that has not been sustainable to the downside. We started to get some support at these levels. That being said, if we get any more weirdness with the banks or any more issues or any more failing, that could throw everything out, and then you get panic selling, and the panic selling is not a true indication of what's happening, and and then you get just some real volatility there. Sentiment, if we take a look at that, we've looked at that here before. We're bouncing off that level. We've kind of worked our way back up now to this, not quite to the mid-range, but we're getting there. And we may have some resistance right here at these levels. Again, lots of overhead resistance on S&P right here. The overall indices, what's interesting that's happening is we are seeing on the Dow stocks, we've got 6 buy stocks in the Dow. And if you look at them, most of them, Procter & Gamble's interesting. That you would expect Procter & Gamble as kind of a recessionary stock, but Microsoft, Apple, Cisco, Intel, I wouldn't expect those other than if bond prices continue to go higher and interest rates end up going lower and the Fed ends up kind of following the bond market, then we may see tech really rally, and that's what you're seeing, money moving into bonds and moving into tech. And so within the Dow, it's not very positive for the Dow only to have 6 components in this uptrend, but you can see the ones that are leading out of that pack. Microsoft had a huge week this past week and really rally, potential breakout on that as well. So keep an eye on those. The Muscle Stocks group, the new buy list, seeing some decent medical names in there again, as we have been a lot the last few months, really, with some good confirmation bars happening there. And so keep an eye on that new buy list. Let's go through some of these first top 3 or 4. Almost all medical drugs. There are some gold stocks in there. Keep a close eye on gold this week. It had a really strong run last week. Could be due for a little bit of a pullback, but it's definitely in a very strong uptrend and looking to continue. So gold stocks should follow that trend, and some of these are going to be pretty volatile to be able to take advantage of. So keep an eye on that. If you don't have full access to the site, you can sign up with the link below, and we look forward to having you. Have a great day today.